Hello, everybody, and welcome back to the Dash Trader Newsroom. And we are getting ready for a hot summer earnings season. Earnings season's already on the way. We've already had some great earnings to date. My name is Michael DeJoy. I'm Director of Educational Services and a licensed professional trader here with Dash Trader. And I'm joined by my co-host, Jill Malandrino, Global Markets Reporter from Nasdaq. Jill, how are you doing?
Good, doing well, thank you.
Great to be here. Great to be at the end of the week, yet another week here in summertime. So we are entering there was a news report today that we are entering into a new phase of economic expansion. That was from the analysts of HSBC. I'm guessing that that's related to digital technology, cloud services, et cetera. We already see from this earnings season that earnings seem to be off to a great start. I mean, Amazon at all-time highs. I mean, you name it. So far, the earnings have been great. Just fill us in a little bit on that, Jill, from your perspective.
Yeah, I think everything's as a service now, but if we think about technology and infrastructure as a service, it's really the area to be in. At this point, there's actually indexes that are built around it. So I find that to be interesting. But we are putting together a massive spend bill around these areas of technology, of healthcare, of infrastructure. We're seeing it happen globally. Certainly the race is on to become more, independent with our resources here. So of all areas of the economy, I think that this is the most attractive. And it's not even just technology, core tech companies, but look how many industrial companies are becoming tech companies in and of themselves. Financial services, same thing too. All the people that the major banks are competing for in the technology field, so are a number of other companies. That's why I thought it was interesting when Morgan Stanley, for example, is making it mandatory that people are back in the offices 5 days. Like if you want to make New York money, you have to be in New York. I think that could be a little bit short-sighted. It might potentially shoot them in the foot because there's a lot of people in the tech space that want a more balanced work-life scenario, and tech companies tend to be a little bit more flexible than the older school investment banks. So I think there's going to be a lot of competition in the tech space, and we're also going to have to do a massive reskilling of the workforce as well.
I mean, we see the rescaling of the workforce already as I think something like they call it the great resign, right? There's something like so many people, 5 million people have resigned from their jobs or in the process of switching jobs. And that I think a lot of the people are looking for better quality of life and the kind of live and work anywhere kind of lifestyle, even if that's not possible for everybody. People are all looking for better jobs in general. And I think that is going in line with that rebalancing of the economy, right? So let's just jump right in. So what do you think of are we done with COVID-19? Here we are in 2021, and the UK is opening finally on July 21st, despite rising COVID cases from the two new variants in the UK. They're mainly dealing with the Delta variant. There's another variant that's in South America, I think mainly in Peru, that is somewhat vaccine resistant, or at least that's the early reports that I've read. Obviously, we're dealing with the ever-changing pandemic, but what are the effects of the pandemic now? I mean, you ask most Americans, they say the pandemic is over, or at least mostly past. What's your perspective? And from an economic point of view, what are your thoughts on how the market reacts to the pandemic at this point?
Well, a lot of people think it's over, but I'm actually doing a paper on this for grad school right now, and only 48.2% of Americans are fully vaccinated. Less than 1% of people in low-income countries are fully vaccinated or have actually only received one shot. So to say that it's over is factually incorrect. But then again, facts have not played much into the scenario for about half the population, as you can see by the numbers. So it's not over. And until we achieve a level of vaccination or a level of herd immunity, it's not going anywhere. And these variants are apparently more contagious than the one we were originally dealing with. Even if you take a look at all the deaths that have occurred confirmed deaths that have occurred as a result of COVID-19, it's largely with people who have been unvaccinated. And for whatever reason you may have for not getting vaccinated, it's not over. So to say that is wrong. So I think it's really going to matter, particularly here in the Northeast, when we get into the fall and winter seasons, because we also have the cold and the flu to deal with as well. Also, you have to remember in the Southern Hemisphere, they are in winter season now. So I think it'll be an interesting tell to see how they come out of it as we're going to our winter. So.
Yeah. But what do you think about from the economic perspective? It seems like the markets have moved on. I mean, the financial markets don't seem to react to COVID news. I mean, there was a time in the beginning of the pandemic that obviously every bit of new COVID information that came out, the markets reacted to. Now we've kind of gone back to like nothing about COVID has any reaction or causes any impact in the market.
Right, and the economy and the market. Well, the economy and the market are two very different things. If we were to go back into lockdown again, we could have, an impact on the economy. But it seems as if the market and related companies have already made that pivot to, okay, we need to figure out what this looks like from a technology perspective. Working virtual or having some sort of a hybrid environment is not going away. So the market's kind of moved on in that perspective. But we spoke about this last year, that K-shaped recovery where the economy and the market were on very different paths. And I still think that it's a very bifurcated recovery. So, again, it's two very different things.
Absolutely. So the market has kind of already baked in most of the COVID news, and the whole digital upswing is kind of, and the new digital direction of things is kind of the market's reaction. And companies' reaction to it is get as digital as they possibly can, get online, make sure their supply chains are in order, et cetera. Now, this is another one of those situations that seem to be, sorry about that, one slide ahead. This is another one of those situations that seems to be already baked into the markets, which is the global tax deal. Seems to be close, although I think there's 9 countries that are planning to sit out of it. Markets seem unfazed by it, and maybe it's already factored in, or maybe nobody cares. 15% taxes is not that high. I mean, you would think on a company like Amazon, which has very thin margins, that a global tax deal, would have a huge impact. Certainly Apple was well known, to have a lot of different, money stashed abroad, having gone to different countries, et cetera. So what are your thoughts on the global tax deal?
I'm surprised the market has not reacted to this because it feels as if globally that taxing the very wealthy and taxing corporations is the way that we're going to fund ourselves through all of these projects that we're looking to initiate. It's concerning to me to squarely put it on the shoulder of all corporations. I realize there are, companies out there that aren't paying their perceived fair share of taxes, but on the flip side, and I don't have the answer for this, but if tax rates go up significantly, that hinders R&D. That hinders hiring new employees, and the only way to achieve earnings growth is to invest in R&D and new technologies and so forth. So it's kind of like a chicken before the egg thing. And so I'm surprised the markets are not reacting to that as well. I don't know if they think, market looks 6 to 12 months out. Perhaps it doesn't think it'll be done that quick enough to impact it in the near term. But, if you don't invest in R&D and people, you don't move on.
Yep. And it seems like, I think it's beyond the market's time horizon. The market is kind of short-sighted in looking at the next earnings season, not looking 6 months, 12 months, 5 years out ahead, and potentially with 9 countries sitting out of this tax deal, or at least giving objections of some kind. Potentially that's we'll kick this can down the road. We'll deal with the global tax deal in 6 months or a year, and then that'll be when it gets baked in or it gets factored in. So I'm thinking that's what the reaction is so far. Does that make sense?
Like I said, I'm a little bit confused by the reaction.
You're dumbfounded as well.
Right.
Yep. And any other stocks any earning stocks that came out this earnings season that was a surprise for you? Anything that you saw on the earnings horizon this year that was like any sector or any specific group of stocks? Obviously, I think all the tech companies did well. Even from what I've seen, even the banks have done fairly well. To me, this has been an astounding, exceptional earnings season. But what were your thoughts on earnings season so far overall?
Yeah, it's a little bit too soon to tell. We haven't had the heavyweights really report yet. We'll get into that next week and the week after. I can tell you with strategists that I've spoken to on my show that because valuations are where they are right now, that earnings are going to have to really be good. And we saw this happen last quarter as well, where if you came in with so-so earnings, either you were not rewarded or there was a neutral reaction to it. So I think coming in with good numbers, having solid guidance is really what's going to be key here. Because again, and I feel like we say this every quarter, but the market continues to march higher, you need to be able to justify these valuations. So again, I think even though we talk about the growth versus value trade on a very short-term basis, going back to what we said in the beginning, longer term, companies that have that exposure to infrastructure as a service, building out technology, helping us to be more independent within the semiconductor space, those are areas that I would be looking at, I guess, as you would say, like the modern day industrials.
Yeah, absolutely. So all like the semiconductor stocks where we've seen a lot of supply chain problems, certainly all the technology companies, those are the places that we want to look. And certainly, the way that I usually look at earnings season is when you see a company like Amazon do very, very well, usually you look for other companies in the same sector that do similar things to Amazon to also do well. And Amazon's in so many different sectors, so many different fields. It's in cloud computing, it's in fulfillment, it's in, it's online retail. Obviously, we want to see that the other companies can keep up and maintain their earnings growth, especially considering good earnings are kind of already expected across the board. Well, thank you very much, Jill, for all of your insights as always. And I know it's the weekend. Enjoy your weekend as always. I hope you had a great 4th of July.
Yes, we did. Absolutely. Too much partying. 4 days
That's
straight.
Right.
Yeah.
Awesome. Well, see you in 2 weeks, Jill.
All right. Sounds good. Take care, everyone.
Bye. All right. I'm just going to transfer to my Dash Trader here. All right, so here I have my Dash Trader shared. Okay, everybody should be seeing my Dash Trader on the screen here. I'm going to be doing a little bit of a special on one of our indicators here. I'm just going to be zooming in on this particular chart. And I'm just going to use the S&P. This is the S&P on the 5-minute. So usually when you'd use this indicator, you would use it on one of your shorter time frame charts. So I'm going to be going right into, I hit right click and I go into configure. Okay, it's actually, I'm not going to configure the actual chart itself. So I'm going to go into study configure. And then I'm going to scroll down to pivot points. Okay, now one of the beautiful things is floor traders used to do all the calculations for support and resistance pivot points on a pen and paper. So they would actually have something like this, maybe a little smaller, and they would do their calculations for their pivot points on a piece of paper. Now, we're very fortunate in that we use Dash Trader and we don't have to go through all that hard work, and we can just go to pivot points and bang, we have our pivot points on our chart. Now, if I go to 15 minutes, you can see all the pivot points. So you can see the darkest green, thinnest line is the closest. And then as you go out, they get darker green. These are all the resistance pivot points. And then these are all the red support pivot points. Now, if we go on to, let's just say, let's look at our 30-minute chart. Now, this is really cool. I mean, it does all the pivot point projections on each day. Okay, now if I want to take out the pre and the post market data, I just go data config and I uncheck that, I hit commit, and now you got your pivots without the intraday. Now, personally, I believe that you should be doing your pivot point calculations without pre and post market data included. All right, so that's my pivot points. Now let me put on my daily chart, because if you notice, you can also see here on the daily. I'm just going to take off my pivot points for this little explanation. Study config, pivot points, remove. All right, so here on the daily of the S&P, we broke out to a new high. Now, we did have that one-day sell-off that was on concerns of global market economy slowing down. But you can see every time our pullbacks are getting shallower, and then we're breaking out to new highs. Now, that kind of looks like an ascending wedge, which is a squeeze upward that might be setting up to some kind of failure. So be very, very careful that some, at least a short-term pullback of some kind might be in the works. I mean, we have squeezed upwards quite a bit. I'm going to jump to the weekly chart. A couple of weeks back, I had mentioned that everything looked like we were about to squeeze upward into a summer squeeze. And certainly that is being confirmed by the weeklies. Here it is as well on the QQQ. We've had a breakaway. Look how many weeks we've been up in a row. 1, 2, 3, 4, 5, 6, 7. So usually when you start to get 1, 2, 3, 4, 5, 6, 7, that's usually when you get some kind of a weekly pullback. We have had, I mean, there's really only one time that we've had, more. We've had like this run here from the beginning of the pandemic that was more than the weekly, 5 to 7 weeks up, and then you get a pullback. But certainly you had these two periods right here when we broke out from the pre-pandemic highs, and then of course at the pandemic lows we had a very, very huge rally. But that's on the QQQ. Let's take a look at this with this extended rally pullback. We've had 3 solid weeks up on the S&P with only 1 week down. If you take out that 1 week down, you got 1, 2, 3, 4, 5, 6, 7 weeks to the upside. Okay, and we're kind of pushing up here at all-time highs on the S&P as well. The DIA also pushing up here on all-time highs with 3 weeks up. Now the DIA has kind of slowed down a little bit, but that's understandable considering that there's been a big push on the tech side of things with earnings, etc. And also some of the inflationary concerns have kind of abated a little bit lately. I want to take a look at USO on the weekly. Oil has done an incredible recovery from being basically, almost worthless, at least from the forward futures contracts, and it's made a huge recovery. It's already up to this is the USO. We kind of have a little bit of a hanging man bar on the weekly as well. Maybe we're kind of almost in the middle of summer now. Well, beginning of summer. By the 2 more weeks, we'll be in the middle of summer. Let's take a look at Amazon, because that's one that I think that really stands out. Amazon broke away on its earnings. I mean, this is the very, very typical first move up, consolidation, and then a big breakout with Amazon's earnings. I mean, to me, Amazon's earnings is the trend setter here. Now, it could also be that Amazon, I believe that Amazon is the trend setter for the earnings season. That I would expect that other companies are going to be measuring themselves against Amazon's performance. Amazon has broken out. Let's take a look at some of the other. I mean, most of the heavyweights are this week, and if we're judging them based on Amazon, I would expect the results to be good. Most of the financials have already come out. JPM. Not as hot, certainly not as hot as Amazon, BAC, similar to JPM, but not bad from a numbers perspective. This is not surprising that the financials are looking a little bit weaker than technology, being as that financials tend to do poorly in a rising interest rate environment. or sometimes have a tendency to be under a little bit of pressure under a rising interest rate environment. Certainly their fixed income desks might be. So certainly the financials are the one sector that seems to be separate from the rest of the pack as far as, as far as technology goes. Technology seems to be having a great start to earnings season. So let's take a look at AMD. Okay, we have AMD setting up. This is a semiconductor company, like Jill had mentioned, that she'd be watching the semiconductors. Certainly looks like it has some, could potentially make a run for the $100 mark. Certainly TSM, I believe it's Taiwan Semiconductor. It looks like it might be making a move to the upside as well, looking like it might be setting up to break out. So I would certainly watch for the semis. I mean, one thing that really stands out to me here is that and I'm just going to use my trend lines, is that you got a kind of flat top and you have ascending lows. So when the earnings do come out, that might be the catalyst or trigger to break out TSM, break out AMD. And you know what's most astounding about AMD is if you go back on AMD, I mean, this was a $36 company in the lows of the pandemic. So you've had literally a 100, 200, almost 300% return, 250% return on this company if you held it from last year to now. Incredible run on AMD. And it looks like it might be breaking out higher into blue sky territory. So really incredible run on AMD. Another incredible run, NVIDIA. Topped out here around 820. Seems like it's already made a run to the upside in the last little bit. But certainly this is showing that strength in semiconductors and artificial intelligence. All right, well, let's just jump back to our news. And everything should be shared at the moment. All right, so we have a winner. So I'd love to congratulate Mike Easewavy, the winner of the DAS Independent Trader giveaway. Thank you so much for everybody who participated in the Independent Trader giveaway. We will continue to have social media giveaways and contests throughout the year. Don't miss out. Be sure to follow us on all of our social media outlets. And a big congratulations to Mike E.S. Wavy, our winner of our Dash Trader Independent Traders contest. Now, I also have some exciting news. Today, we released the first of our newest 8-part video series, Styles of Trading, on our YouTube channel. So visit our Dash Trader Pro YouTube channel to view it. And this is a series on all the different styles of trading that I've used personally in my 23-year trading career. Stay up to date, everything DAS, by signing up to our monthly newsletters and emails. Simply fill out a form at the bottom of our webpage. Subscribe to our YouTube channel, Dash Trader TV and Dash Trader Newsroom Reminders. Follow us on social media, LinkedIn, Twitter, Facebook, and Instagram. And I thank everybody for being here with us. I wish you all a very profitable earnings season, and I look forward to seeing you in 2 weeks. Bye-bye, everybody. Have a great weekend. Hope you had a wonderful 4th of July.